three ginormous headlines in 1 week, and they all point in the same direction. Somebody's going to get a whole lot richer potentially. The question is, will it be you? Hi, I'm Damon, and welcome to Moral of the Money, where we break down information coming out of the markets, the economy, finance. So it's simple and plain, so you know how to make moves to grow your portfolio, get a little bit richer, so you're in a better position to help yourself, your family, your community, your world. If that's important to you, give a like, give a subscribe, and share with someone who's like-minded so the channel can continue to grow and we can get more like-minded people who want to get wealthy, but more importantly, want to give back holistically and abundantly. So let's go. There's so much going on in the world. It's very easy that you might have missed one or all of them. The first one was an executive order coming out of the White House that was asking the Securities and Exchange Commission, the Department of Labor, and the Secretary of the Treasury, along with institutions that hold your 401k, to basically come up with a framework for what it would look like to include alternate assets into a 401k. So if you've had a 401k and you've been thinking, man, I want to add more than just stocks and bonds to my 401k, this might be for you. The order said, hey, we want to see what it looks like if we were to add crypto, private equity, real estate, and potentially other riskier type assets to a 401k. Now, this caused a lot of hubbub because 401ks are designed to be a little bit more safer and secure because they're retirement accounts. But at the same time, you kind of determine how risky you want your 401k to be. So nothing is set just yet. But the question I want you to be thinking about is, if this were enacted and we were able to add crypto, real estate, private equity, and other assets to 401ks all across the country, wouldn't that increase demand for these assets? And when demand increases, what also increases? Typically price. So that could be good for anyone holding these assets. So think about that. It's not final, but the purpose of this is to put it on your radar so you can follow this. And I'll be keeping you up to speed so you know how to position yourself in the event that this takes place. Secondly, there was a sudden 39% tariff on gold bars coming into the US. Now, these are specific 100 ounce and 1 kilo gold bars coming from Switzerland. So why is that important? It's important because if this goes through, if this tariff holds, then the price of importing gold from overseas increases by a third, which is a significant amount. So instead of paying $1,000, now you're paying over $1,300 for the same amount of gold. So if you're a gold shop that's here domestically, what are you going to do? Are you going to continue to get gold from Switzerland or overseas? Or are you going to seek out domestic suppliers for your gold? If I owned a gold shop, I'm probably going to switch to domestic or at least explore domestic options to see if they're cheaper. What does that mean? That means if, say, you're a gold miner and you're located in the US, are you going to have more or less people knocking on your door for gold? Probably more, which means now you can either continue to sell it at your normal price. You can increase the price by a little bit, but by less than the tariff. But one way or the other, the demand for domestic gold is going to go up, potentially, if this holds. Now, am I saying buy gold? No. But if you're a gold bug and you want to add some gold to your position, you might want to consider domestic supplies of gold, which also begs the question, gold miners make gold. Wait, there are gold miners who are on the stock exchange, who are publicly traded. Wait, does that mean demand for those gold miners and their product is going to increase? And typically, if the demand for a company's product increases, what happens to their stock price? It typically also increases as well. So if you did want to, say, include some of these gold miners that are domestically based to your portfolio, that might be a good idea because, in theory, the price of their stock could go up. Simple market supply and demand dynamics. These are the signals we get from the news and from policy decisions that give us clues about, oh, this is where I might want to position my money in order to leverage these policy decisions. Here's another thing to consider. In the short term, let's assume this tariff sticks and everybody that was buying gold overseas floods to try to buy gold from US miners. Well, they're not going to have enough gold on deck to supply this demand. More than likely, they're going to have to ramp up their production. So there'll be a short-term period where there's not enough supply to meet the demand. So if there are investors who want to invest in something right now and they did want to buy some gold, but they're not able to because they don't want to pay 39% more from gold coming from overseas, and the domestic miners are overwhelmed with orders, they might want to put their money elsewhere, like, say, digital gold, i.e. Bitcoin. So already in these first two examples, we see potential increase in demand for Bitcoin and cryptocurrency just from the 401k executive order and the 39% tariff on gold bars. But it gets better. Speaking of Bitcoin and safe haven assets, the Ripple case. You may or may not have heard, this is the SEC, the Security and Exchange Commission versus Ripple Labs. There has been a case going on, a lawsuit. The SEC sued Ripple Labs 4 or 5 years ago, basically saying that the cryptocurrency XRP that is associated with Ripple Labs is a security. And we won't get into all of that. Here's the most important part. The case is over. Like, we thought it was over months ago, but the SEC and Ripple were still trying to determine what Ripple's penalty would be. But both sides said, you know what? We're done. Let's just move on. Let bygones be bygones. So what am I saying? Invest in XRP? No, I'm not saying that. This is not financial advice. This is thinking advice. This is how to maybe posture yourself. This is think more broadly. The SEC versus Ripple Labs case was one of the last cases remaining from the last administration, the Biden administration's moves to kind of thwart the crypto industry. And that's not a political statement. That's pretty much fact. The SEC went after countless cryptocurrency exchanges, cryptocurrency companies, lawsuit after lawsuit. And the regulatory environment in the United States was not one that was friendly to cryptocurrencies. But now we see that this is over. And one of the biggest headwinds to crypto, not only domestically, but worldwide, is over as well. Now, this is not only a big deal for Ripple Labs and XRP, it's a big deal for the cryptocurrency industry in general. While Bitcoin and Ethereum already had their forms of regulatory clarity, i.e., they already have Bitcoin ETFs, Ethereum ETFs, this is now one more step closer to fully legitimizing this industry. And I'm not implying that President Trump had anything to do with this lawsuit ending. What we do know is that the president is invested in the cryptocurrency industry. He has his own meme coin. His wife has a meme coin. His son, Eric, has been super bullish on Bitcoin and crypto. Howard Lutnick, his Secretary of Commerce, is super bullish on Bitcoin and has said so himself. And the president also has colleagues and friends who are in the private equity space. So when you look at all of this kind of together, we see an administration that the president himself, his family, and his inner circle of folks all stand to benefit from these policy moves. I'm not saying that there's any kind of insider action, but what I am saying is, if we see the winds pointing in a direction, where are we going to fly our kite? That's really the question I'm asking. Like, what are you going to do? How are you going to position yourself? Because if the elites are putting things in place so that their assets, their specific asset classes can increase, and those asset classes are open for you and I to invest in, then what should we consider doing? The moral of the money is, if you don't learn to spot political incentives, you're going to be too late because you're going to be reacting. You're going to be in your emotions. And we've probably all seen the meme, stay out of your emotions because there's no money in there. So we don't want to be triggered. We want to be signaled. Big difference, not triggered, signaled to say, hey, if this is what's going to happen and these individuals stand to benefit, then how could I also benefit just like these individuals? That's the moral. Start paying attention to who benefits from policy changes so you can get ahead of the crowd. So one thing you can do today is pick one policy or market change and ask, who wins from this? Then see if you can invest in a similar way, even if it's in small amounts. If you like this type of content, it resonates with you, and you're here to learn how to decode these markets, grow your wealth so you can better help yourself, your family, your community, then you're in the right place. Make sure you hit like, subscribe, and share with other like-minded individuals so we can grow this community, grow this movement, and we win so that those around us win, and we can help make the world a better place.